Welcome back to 8-Minute Finance, the channel that turns the most complex topics in money, crypto, and investing into easy, entertaining, and culturally relevant breakdowns. Today, we're diving into Bitcoin, the digital currency that has been called everything from digital gold to internet magic money, and yes, even a scam, usually by people who later end up quietly buying some on Cash App at 2 a.m. in their pajamas. In 2025, Bitcoin is still making headlines, whether it's smashing through price records, frustrating regulators, or sparking heated debates at dinner tables. And like a surprise celebrity scandal that hijacks the entire news cycle, Bitcoin can drop a rally that changes the market's mood overnight. But to really understand it, we need to go back, way back, to the moment when Bitcoin first appeared and why it even exists. The year is 2009. The world is still reeling from the 2008 financial crisis. Banks were bailed out, millions of people lost jobs, and public trust in the financial system was at an all-time low. Out of that chaos, a mysterious figure, or group, going by the name Satoshi Nakamoto, released a white paper. That white paper described something revolutionary: a peer-to-peer electronic cash system. Translation: money that could move directly between two people, anywhere in the world, without a bank, PayPal, or Western Union standing in the middle. At the heart of this idea is blockchain technology, a public ledger that records every single Bitcoin transaction ever made. Imagine a giant Google Doc that everyone can see, but no single person can secretly edit. Each page in that document is called a block, and once it's filled, it gets locked in forever and linked to the next block. This chain of blocks, the blockchain, is what makes Bitcoin secure, transparent, and tamper-proof. What makes blockchain even more interesting is that it isn't limited to money. The same system can be used for voting systems, supply chain tracking, digital art, NFTs, and even medical record storage, all without relying on a single central authority. In those early days, Bitcoin was worth almost nothing. The first real-world purchase using Bitcoin: 2 pizzas in 2010 for 10,000 BTC, which would be worth hundreds of millions today. Yep, the most expensive pizzas in history. While Bitcoin's white paper read like a tech utopia, its early reality was a little different. In the early 2010s, Bitcoin quickly became the currency of choice for internet pioneers, libertarians, tech geeks, and yes, people buying less legal items on marketplaces like Silk Road. Governments didn't like this. Media outlets ran stories painting Bitcoin as a shady, dangerous tool for criminals. And the price? It was swinging harder than a meme coin after Elon Musk tweets about it. But despite the chaos, Bitcoin's fan base grew. Developers improved the technology, communities formed, and word-of-mouth spread. By 2017, Bitcoin's price skyrocketed from under $1,000 to nearly $20,000 in 1 year. Suddenly, your coworker, your neighbor, and even your grandma's book club were talking about Bitcoin. Then came the crash. Prices fell by over 80%, wiping out fortunes overnight. People who thought they'd retire early suddenly became long-term holders, or hodlers, as the crypto community jokingly calls them. These wild ups and downs earned Bitcoin its reputation as both an opportunity of a lifetime and a roller coaster ride not for the faint of heart. It was also a time when new coins and altcoins started popping up, each promising to be the next Bitcoin, but most faded into obscurity. As Bitcoin matured, it began breaking out of the internet bubble and colliding with the real world. Big institutions started to take notice. Companies like Tesla, MicroStrategy, and even some banks began buying Bitcoin for their balance sheets. Entire countries got involved. El Salvador made Bitcoin legal tender in 2021, allowing people to pay for goods, taxes, and services with it. But not everyone was on board. China banned Bitcoin mining entirely, citing environmental and financial concerns. The U.S. ramped up its regulation of crypto exchanges. Other countries adopted a wait-and-see approach, watching from the sidelines as Bitcoin's influence grew. A big debate emerged around Bitcoin mining. Mining is the process of verifying transactions and adding them to the blockchain. Miners use powerful computers to solve complex puzzles, and the first to solve one earns new Bitcoin as a reward. The catch? This process uses a lot of electricity, more than some entire countries. Critics say it's an environmental disaster. Supporters argue it's a small price to pay for a truly decentralized, borderless financial system. To address these concerns, some miners are shifting toward renewable energy sources like solar, wind, and hydroelectric power. Others are exploring new consensus methods, like proof of stake, that use far less energy, though Bitcoin itself remains committed to its proof-of-work model for security reasons. Meanwhile, Bitcoin was slowly becoming more accessible. Payment apps added Bitcoin wallets. ATMs started dispensing it. Even some retailers, from coffee shops to luxury watchmakers, began accepting it for everyday purchases. In some places, you can even pay your rent or buy property using Bitcoin. Fast forward to 2025. Bitcoin has one foot in the mainstream and one foot in rebellion. It's no longer just for tech nerds or early adopters. It's held by celebrities, influencers, hedge funds, and yes, still by those stubborn hodlers from 2013 who refuse to sell. The price is pushing past $80,000, despite multiple Bitcoin is dead headlines over the years. In some places, you can buy coffee, pay for plane tickets, or donate to charity in Bitcoin. Political campaigns even accept it as donations. In parts of Africa and South America, Bitcoin is becoming a lifeline, helping people store value when local currencies collapse. For many, Bitcoin is a hedge against inflation, a way to protect wealth from the devaluation of traditional currencies. For others, it's still a speculative gamble, and for its most passionate believers, it's the start of a financial revolution that puts control back in the hands of the people. Some even see Bitcoin as a freedom technology, something that can't be easily censored, shut down, or confiscated, making it especially valuable in countries with strict capital controls or unstable governments. But here's the truth. Whether you think Bitcoin is the future of money or just an overpriced digital token, it's not disappearing anytime soon. The network is stronger than ever, the community is growing, and the conversation around it is only getting louder. So, is Bitcoin the future of finance, or just a shiny bubble waiting to pop? That's for you to decide. One thing's for sure. Bitcoin has changed how we think about money, value, and trust. And even if you never buy a single Satoshi, understanding it might just help you navigate the future of finance. Ready to explore crypto yourself? Sign up with my trusted exchange partners and get free rewards. $30 bonus here. Thanks for watching 8-Minute Finance. If you enjoyed this breakdown, like, subscribe, and hit the bell so you never miss the stories that matter in money and investing.